Hey, Amazon sellers. I want to share something that can completely change the way you run your business. For the last decade, I've built a world-class Amazon team that's helped me sell over $50 million on the platform and scale multiple seven-figure brands. Now, that same team and process is available to help you build, grow, and scale your Amazon business. This is not a course. It's not a DIY program. It's done for you Amazon growth handled by proven experts. We handle everything from listing optimization and SEO to PPC, inventory, catalog management, promotions, review strategy, compliance, and new product launches, so you can focus on running your business while we handle the rest. If you're ready to turn your Amazon channel into a profit machine, visit the link in the show notes, calendly.com/firingtheman/Amazon, and book a time to see if this is a good fit for you.
Welcome everyone to the Firing the Man podcast, a show for anyone who wants to be their own boss. If you sit in a cubicle every day and know you are capable of more, then join us. This show will help you build a business and grow your passive income streams in just a few short hours per day. And now your hosts, serial entrepreneurs David Schomer and Ken Wilson.
Welcome, everyone, to the Firing the Man podcast. On today's episode, we are joined by Art Sordo, the vice president, and Joe Stroot, the client advisor at Centered Partners. Centered Partners is a St. Louis-based integrated advisory firm that brings together commercial insurance, employee benefits, M&A advisory, capital markets, and commercial real estate. Today, we're going to talk about something every entrepreneur eventually has to deal with: how to protect a growing business without treating insurance as a once-a-year box to check. We'll cover common coverage blind spots, product and cyber risk, what happens when a claim hits, employee benefits, key person protection, and the insurance issues that can affect an acquisition or exit. Really looking forward to this podcast. Art and Joe, welcome to the show.
Thanks for having us, David.
Absolutely. So to start things off, Centered Partners describes itself as an integrated advisory firm rather than a traditional insurance broker, bringing insurance, employee benefits, M&A, capital markets, and real estate all together. So what does that integrated model change for a business owner in practical terms?
Well, David, if you look at these different pillars that within our advisory firm, they certainly all are kind of run parallel and are involved in some way, shape, or form. The founder of our firm has expertise, background, and experience in all of these different silos, and had the vision to start a firm that kind of brings all of these together. So, we have property and casualty insurance clients who may have real estate needs and or are looking to raise capital. With us being owned by a private equity firm, not only do we have access to capital, but access to other capital markets in the event that one of our clients is looking to raise money. As you know, there's a lot of M&A activity out there across all industries and sectors, and that certainly is prevalent with our clients. So we have to. We feel that we should be, an advisor on the M&A front as well, because there is a lot that goes into a transaction you wouldn't think, but insurance and employee benefits can be a pretty important piece of the pie, during diligence and during M&A transaction. The team, the broader team has a lot of experience in that with our founder being in the private equity space, but also me starting my insurance career, kind of learning through the private equity and M&A lens. So, long answer to your question, but these are all sort of, third party services that are kind of siloed, where we felt we could differentiate ourselves by bringing all of this expertise in-house and sort of being a one-stop shop for our clients and in this regard.
Very nice, very nice. And I have to say, I was introduced to both of you through a mutual contact, Ryan Tack. Ryan was my mentor, and I did a lot of M&A due diligence with him, probably for about 5 years. He is one of the brightest people I've ever worked with, and he's joined your guys' team, and you guys are working together. And so, really, really excited to continue this conversation and learn more about Centered Partners. So, one thing I'm really interested in is you guys deal with all types of different business owners, and I would imagine when sitting down with a business owner, very quickly blind spots surface and rise to the top. And so, what are the most common insurance blind spots that you see for business owners?
Kind of the most frequent pattern we tend to see with new business owners or just growing businesses is, that their coverage kind of stays stagnant from the startup phase up through a growing business. And so, oftentimes founders, they go out and they seek insurance oftentimes because there's a contractual obligation. If you are, let's say, if you wanted to get onto Amazon or, maybe if you're a contractor, you need to have it to be able to pull a permit. And so oftentimes people say, hey, what's the minimum I could get to kind of get going? Right. And it becomes kind of an out of sight, out of mind thing. Over time, what you'll find is, maybe you started off as a 3-person operation and, over time you grow to have 50 employees, you have higher revenues, you might have more physical locations. So what we tend to find is things like people are underestimating what their business interruption or business income coverage is. Maybe they haven't updated their property values as it relates to the equipment they have or the amount of inventory that they have. Really just kind of treating insurance as like a check the box, as opposed to, where they're checking the box once a year because that's when their renewal comes up. And so that's really the only time they're thinking about it, really, as opposed to being an ongoing conversation with your advisor. So, usually the kind of trigger points I would say, like, look, when you stop and you realize, oh, wow, my employee count is quite a bit higher. Oh, I'm going into new product lines, into new territories. Maybe you created a new company, a new subsidiary within what you were doing. Those are things that you should just be bouncing those off of your advisor to find out, hey, am I missing anything? Do I need to update anything? Because oftentimes, and it's the worst case scenario, when you find out you should have updated it is when something happened, you called them because you need your insurance to perform, and then it's not going to perform to the level that you're expecting it to.
Got it. Now, you had mentioned business interruption, and that is one I've heard of, but am not very familiar with. So can you go into that a little bit more? What is that, and what would be an event that would trigger a business interruption?
So think of something like a fire happening, right? You are, for the sake of this conversation, let's say you're a manufacturing outfit, and where you on your production line, you have a fire and you're down. So let's say in that time you are going to be your factory is going to be down for 6 months, right? While you replace your equipment, maybe you have to make some physical changes to the structure. You have fire damage. In that time, if you have proper insurance, basically your insurance carrier will replace your income based on the amount of time that you're down. So you can imagine if you're a startup and let's just say, you say, well, my revenues, we feel like this year is going to be $600,000, right? So in the carrier's head, they're thinking, okay, well, we're covering them for $50,000 a month. That's normally how those things are kind of allotted out. But your revenue grew, you didn't bother to update in your insurance, and now you're doing $3 million a year, right? So now that's, being down for 6 months instead of, being 300,000, it's 1.5 million, right? So the challenges that come up, right? You're still going to have a mortgage, right? Or a lender on your building if you own it. You have employees that would like to get paid, right? So, you can fire them all, but then how are you going to get them back when you want to get up and going? So that business income or business interruption coverage really helps you be able to rebound from a loss like that.
Okay.
Yeah, and then David, as specific to the e-commerce world, there's contingent business interruption coverage, and that can extend to income loss when a key third party service provider, whether it be a hosting provider, payment processor, fulfillment center, goes down or has an outage, that will kick in for you.
Okay. That is really, really helpful. And it sounds like, in the event of, say, a fire, that could be the difference between the company completely sinking or, being able to rebuild that factory and retain employees and continue on after the rebuild. So that's really helpful to know.
Yeah. And it's, Art and I just had a real world kind of scenario or conversation with a prospect, and Art, flat out asked the question, okay, we see that you have X amount in limits for your business interruption, but, have you thought about what it really looks like if your, let's just call it a manufacturing facility, floods or, catches on fire? Number one, have you thought about how long is it going to take you guys? Is it going to take you a month to get back up and running? Is it going to take you 6 months? And, have you honestly thought about what kind of worst case scenario looks like? And oftentimes they're underinsured in that scenario.
Okay. Now, I'm in the physical products business. Most of the listeners here are in the physical products business or some aspect of that. And one of the things I can say as a business owner is the different types of insurance can sometimes be overwhelming. We've got general liability, product liability, property and inventory, workers' comp, cyber, umbrella, and anything else. And so as you're sorting through that, what are the items that are need to have and what are the items that are nice to have?
Specific to e-commerce?
Specific to, I would say, like physical products. Yeah. Just a general,
general liability. I will tell you, everybody should have it. Generally is not a particularly cost prohibitive coverage in your world. But you will find that if you want to do business with anybody, you tend to need to have it. In terms of, the real life use of it for you, can be a little difficult when you're in an e-commerce world because it's not like you have a lot of people walking through your particular, facilities, things like that. I would say the most important things that would strike me for an e-commerce business would be product liability, and also cybersecurity or data breach coverage. Those are things that oftentimes can be quote unquote kind of throw-ins in a package, right? You can check a box, your broker can check a box on a package and you think you have coverage, but really, usually those kind of throw-in endorsements are not robust enough to meet the risk that you specifically have in a business, right, in e-commerce. So we would normally recommend that you have your own standalone product liability. Again, the verbiage within it is going to be much more robust. The limits that they will offer are also much more robust. And the same thing goes with cyber/data coverage. Because so much of what you're doing is based online, you have quite a bit of customer information, things of that nature that you're holding. You wouldn't want to end up in a situation where, maybe you end up with some ransomware and nobody can order from you because you accidentally clicked an email and they've taken over all of your systems.
So cybersecurity insurance is one. If I were to list out probably the top 5 things that keep me up at night, cybersecurity is one of them. Everything that I'm doing is from a laptop. It goes up to the cloud. I can't see the cloud. I don't really know where that data is at. And as I, work with clients on consulting engagements or just the overall mass of data that I have is seemingly more valuable, and I don't fully understand it. And so what, on the cybersecurity front, what are some things somebody should be looking for in a policy? And, you had mentioned like checking the box versus having like adequate coverage. So what would be some things that you would need to look at there? Hey guys, I want to take a minute to thank today's sponsor, the book Cash Flow by Scott Brandley and DJ Sprague. I've spent the last decade building e-commerce brands and over 20 years running businesses. So I've read a lot of books on growth and profitability. Most of them explain the problems, but they don't give you many real-world solutions. Cash flow is different. This book uncovers the hidden leaks inside your business, things like false payment declines, friction in your checkout, missing trust signals, and operational inefficiencies that quietly crush your conversion rate. And a lot of these losses never even show up on your P&L. I'm a retired CPA and I review my numbers constantly. And even I had a few aha moments reading this book. If you run an e-commerce business, this is one worth checking out. There's a link in the show notes where you can grab a copy of Cash Flow, CASHFLO, and learn how to start plugging those hidden profit leaks. Now, back to the episode.
Well, I'll answer this at a high level before Art can probably provide a little bit more color. But a lot of clients that we work with, when we first start working with them, they have a business owner's policy that includes some sort of cyber coverage, and that organization thinks that is sufficient and they're good to go. But we advise, I would say, overwhelming majority of our clients, regardless of what industry they're in, to carry a standalone cyber policy that has much broader coverage. And I'll let Art kind of piggyback off of that.
Yeah. So the things that you might see in there, really, some of it will speak back to kind of sub limits that occur, and I'm risking showing how big of an insurance nerd I am. But, a lot of times you'll see a big number like $1 million and you think, oh, well, no matter what happens with cyber, I'm covered for $1 million. But what you'll find is, there might be a sublimit for ransomware. There might be a sublimit for certain types of data, sublimits for, let's say, a business interruption. So really it's about making sure that those sublimits are kind of covering what the real world risk is. And that might be really hard for a business owner to be able to ascertain by themselves. I mean, part of it is having an advisor that can really grasp a little bit about what you're doing, as opposed to just, plucking a number out of the sky. So again, sublimits are an important thing, whether you have both first party or third party claims, right? It may not be somebody directly through you. It might be a vendor that you use. But ultimately, when things are going to a courtroom, most plaintiffs are going to shotgun and try to hit everybody that ever touched anything. So even though you as an e-commerce business did all the right things, if a vendor you used didn't use the right thing, do you have anybody that's going to represent you when a lawsuit gets served?
Okay. That's really helpful. On the product liability side of things, and a lot of people in the e-commerce industry, they're manufacturing, they're importing, they're distributing physical products. Some of them, they are running that entire process from start to finish before it leaves the door. Some people are just touching certain parts of that. So for instance, like drop shipping is big in this industry, where somebody never really has physical custody of that product before it's sold. They're working with a partner to manufacture and distribute that product. And so on the product liability side of things, what should owners be thinking about in terms of exposure? And what do you think most business owners misunderstand about product liability?
Some of the things I see is that they think because they don't make the product, they, aren't on the hook for anything. If you private label something, you are on the hook on it. If you import it from overseas, so let's say you're bringing something in from China, right? That Chinese manufacturer, if they don't have a domestic footprint truly, they are kind of outside of the scope of what you can go after. And so, you as being the first party importer of that product is going to have, some negligence. And, if something was to occur, that typically is what we see more than anything else. They think, oh, well, you know what? I didn't make the product, so then I don't need it. And you're like, well, depending on where you are in the chain of custody, it could be very important, right? And sometimes the facts of where your product's coming from and where you're taking custody, it can be an evolving story, right? Like maybe you were getting it from one place when you started and maybe you didn't have the kind of exposure and then things change and does anybody know in the insurance world that things have changed?
Okay. When you are working with a manufacturer, a third-party manufacturer, should that be part of the discussion is what is your coverage on these products? And is there ever a situation where, say, a manufacturer would have product liability insurance that would extend to or cover the person that they're selling to?
I mean, there are some cases you can't really make blanket statements about anything in our world. So sometimes that comes down to the contract that you have with the manufacturer. The question becomes where you can run into an exposure is if that manufacturer in the, through the process of this claim or this loss that occurred, have they become insolvent? And then where do you go? Right. And who do you go after? And then, hey, you, Mr. E-commerce owner, you're kind of the next person up. I hate to say it, but it doesn't really absolve you if somebody, has some sort of a personal injury or property damage because of a product that they bought from you.
Okay. That sounds good. Let's now pivot into and speak to our manufacturers who are listening or people thinking about manufacturing. I will tell you, you cannot drive, at least in Missouri, you cannot drive 50 miles and not see an injury lawsuit firm on a billboard. There's not a 50-mile stretch in the entire state. And I'll tell you that on the list of things that keeps me up at night, that's one of them. Obviously, in manufacturing, we want everybody to be safe. Accidents do happen. And so what is what types of coverage should somebody be looking at when they have employees, when they're manufacturing and making things? And what are some things to be on the lookout for a solid policy?
Well, in manufacturing, probably the biggest thing is workers' compensation, right? You have a lot of heavy machinery. You may or may not have products that you use on the factory floor, let's say, that might create an injury. Sometimes it's a slip and fall hazard. I would say first and foremost, that's a very important thing to make sure that you have covered personally, or I say personally as a business. The other thing that happens with workers' compensation, it's one of those things that if it is required by law. There are times where I think it's 5 or more employees, you have to have it, but in an ever-changing business, maybe you didn't have it, you weren't required by law, but that is one of the few things that will really pierce the corporate veil, right? If one of your employees gets hurt and you don't have workers' compensation, maybe you set up an entity, but you can be personally held responsible for that if you don't have any workers' compensation coverage in place. That would be the first thing. I mean, and look, if you're a manufacturer, do you distribute your product out there? Kind of the next biggest bucket, you would say, as it relates to seeing all these personal injury billboards and advertisements is business auto and having, robust coverage on your business auto. If your semi is moving products down the line, down the road, and, they were to hurt somebody in an accident, you are on the hook for their lost wages, their medical expenses, their pain and suffering. And so those numbers are where you really get some significant losses in our world. So having business auto coverage, having an umbrella or excess that goes over that as well. Because, most business auto policies cover $1 million. $1 million gets you nowhere if you're in an emergency room or in a courtroom. And so, normally I would tell you at a minimum, we like to see most of our businesses have at least a $5 million excess or umbrella policy. Obviously, as that business grows and what we're protecting grows, we can look at towers. We have towers as big as $25 million in excess. And you say, well, how could that ever happen? Well, all it takes is enough people thinking, again, on something like a semi, we've all seen at some point on our highway those kind of pileups that occur, right? And, ultimately, if you are the first domino to fall, you may end up liable for everything that happened behind you. And I know that seems like such an unlikely event, but really, that's what insurance tends to be about, protecting you from that really unlikely event.
Okay. Am I the only one who those billboards give anxiety to?
Look, I've been in insurance for 17 years, so I see them all the time, and it makes me cringe.
If you think Missouri's bad, go down to Florida.
Oh, is that right?
Yeah.
I just, as someone who's, I'm running my own business and have put in as many safety checks and protocols as possible. But still, accidents do happen, and it's something that, keeps me up at night. So,
and as far as, Art was mainly sort of referencing, kind of first party type scenarios, but then you also have, third party scenarios where someone who is not an employee or affiliated with the business is on premise, and there's just keep it simple, a slip, trip, or a fall. That's, and it turns out to be bad. Well, that's going to hit your general liability. But to Art's point, making sure that you've got the umbrella or excess and underlying coverages scheduled there properly is also something we see is not always structured correctly with clients that we work with.
Okay.
Yeah, Joe, we have a great example with one of your prospects the other day, a fast growing business. And they start out as, brick and mortar restaurants. Now they have some packaged food, and one of their locations wasn't included at all in that umbrella. In fact, it was the packaged food item, I believe, or packaged food location that was not listed, and that's just something that we highlight that, we said, look, whether you do business with us or not, you need to fix that.
Okay. Yeah. No, that's a really good example. You guys have mentioned umbrella quite a few times, and what is a layman's explanation of umbrella, and where does that fit into the portfolio of insurance?
So really what it is just extra limits of liability coverage above certain underlying policies, right? So, when you go out and take an umbrella, like for example, I have a personal umbrella, for really, it's mostly about my auto, right? I own a home and I have two vehicles in my name. And I have I have a $2 million umbrella actually over it all. So if there was an incident in my home, one of my kids' friends at the house and something crazy happens, I have a $500,000 in coverage on my homeowners, another 2 million. So it's $2.5 million. When I drive a car, it's the same thing. So, right now, if I was to get into a car accident, my current insurance carrier, if there was a claim against me, would cover up to $2.5 million worth of claims. So as it relates to it, and I just use that example because everybody has home and auto, right? So as it relates to businesses, you are also putting having underlying exposures. So usually you are always going to have your commercial general liability under that. From there, there are things that you might choose to add or exclude. And depending on the type of business you have, it might be cost prohibitive to add certain coverages. So for example, if you're a bar owner, You might have your general liability that includes liquor liability, right? Somebody gets overserved and goes out and drives home and hurts somebody, but maybe your umbrella might carve that out. But you could schedule other things. You can schedule your business autos there. You can schedule parts of your workers' compensation under that. At times you can also add products under that, right? So you really, it will just speak to any kind of liability coverages that you have underneath or that your business, purchases outside of that. So it's general the most common misnomer is people think it goes over property. Like there is such thing as excess property. I'm not going to muddy the conversation here with it, but most of the time when we're talking umbrella or excess, it's excess liability or umbrella liability coverage.
Okay. That's helpful. Now, in prepping for this podcast, I was looking at you guys' website, and the new standard, as you guys call it, is the 120-day renewal process, full transparency, quarterly strategic reviews, proactive risk intelligence, and claims advocacy. Why does that matter? And what should a business owner be asking their broker advisor before their next renewal?
Well, I'll, Art touched on it a little bit at the beginning when, we were asked about, what is somebody, a first time business owner who's just opening up shop, what do they need to be, sort of aware of? And it's kind of like, well, you don't know what you don't know. You don't maybe necessarily know where all the risks lie. Same thing goes for a growing company. And, we might have a client where they just, their insurance just renewed on, August 19th. And, they're projected to double in revenue or, double in size by, August 19th of 2027. Well, if we don't know exactly how and what and where the growth is coming from and what is changing in the business, then when it comes time for renewal, we don't know what to, we might be missing something when we're going back out to the carriers to tell our story and tell the company's story. So first off, we want to be, we want to have those touch points at a minimum, quarterly touch points to say, hey, Mr. CFO, Miss CFO, what's changed with the business? Where's the growth coming from? Let us understand how things are changing. So we, number one, are in the know. And when we are then approaching the current carrier or other carriers we want to talk to, we have the full picture. We've got a clear story to tell them. So that's one part of it. Another part of it is, we see ourselves as, the company's outsourced risk manager. And you certainly want to be talking to your risk manager multiple times over the course of the year. We, as opposed to just getting a call saying, hey, Joe, hey, Art, I think we have a potential property claim, or, we want to be proactive so that we are, best positioned to, help that business grow and make sure as they grow that they are properly covered and they're being properly advised by us in the way of insurance and employee benefits.
Okay. Very nice.
And to piggyback on that a little bit, it's also about kind of how the business evolves. I think back to one of my old clients, I had as a client prior to my life here at Centered Partners, but the time he had opened up a property management company, right? So he was helping people with their rental properties, that sort of thing. Then, I knew that he went out and he started buying his own rental properties, and we were insuring them, and there wasn't really much of a challenge there. One day I end up on social media and I see that now he is doing renovations for some of his clients' rental properties. And so I give my friend a call and I'm like, hey, what's going on here? And he's like, oh, well, I realized as these people were buying properties, we could update the kitchens and baths and get higher rents. And I'm like, well, what company are you doing that under? Obviously the property management group. And I know if something was to happen in construction, the policy I'd written for him was for a property manager. So it had carve outs for all the things he was doing. And so, that what we ended up doing in that particular case is said, look, you've got to set up different entities so that, your mistake when you're doing a kitchen remodel doesn't end up costing you the real estate that you own. Sometimes that's where we have to kind of step in and it's, step outside of just the insurance world is look, really just advise our clients on, the real life exposures they have so that, they, even though they're operating in good faith, accidents happen and we don't want them to, suffer a financial loss, because of some unforeseen event.
That makes sense. That makes sense. And it seems like your stereotypical entrepreneur is constantly making a series of pivots, and having your insurance pivot with you, it makes complete sense and is probably, in your example, an afterthought sometimes. And so, no, this is a helpful reminder. Joe and Art, this has been a really, really helpful conversation. Before we get to the fire round, what types of clients do you serve at Centered Partners? I mean, of our listeners listening who are interested in getting in touch with you, what types of clients do you serve?
That's a good question because we have clients across almost every sector, where we really are gaining traction and have in-house expertise is in the commercial real estate development and management space. Art himself is very well versed in property coverage, which is a huge part of anything commercial real estate related. In my career, I have historically worked with a lot of private equity firms. They're buying and selling companies, across multiple sectors. A lot of it, I would say, is manufacturing, B2B services. What else, Art? On the employee benefits side, it pretty much industry agnostic. It's more on the property casualty side where there's more nuances with coverages as it relates to specific industries. It's a little more sort of across the board in employee benefits if we're dealing with lower middle market sized companies.
I would say the other industries that we tend to have a lot of success with would be anything in the construction or contracting world. We've been able to help a lot of our customers in those classes of business. Additionally, financial services, we've done quite a bit of business in that world, specifically mortgage brokerages.
That's right. Outstanding. And if people are interested in getting in touch with you, what's the best way?
I'd say reach out via email, LinkedIn, come to our website, but certainly feel free to send me an email or a message on LinkedIn. That's probably the best way.
Sounds great. And I will post links to all of those in the show notes. Now, before we close out the show, we have something called the Fire Round. It's 3 questions we ask every guest at the end of the show. Are you ready?
Yes.
Ready.
All right. What's your favorite book?
I'll go. I'll say Meditations by Marcus Aurelius.
That's a good one. All right. What about you, Art?
Well, mine's kind of ever evolving right now. That what's top of mind is Wooden on Leadership, How to Create a Winning Organization. It was co-written by John Wooden, and just very interesting parallels about putting together a basketball team and putting together an insurance firm.
Oh, very nice. All right. What are your hobbies, Joe?
Love being active outside. That certainly includes golf. And then I think Art and I both would agree on this. I'm an aspiring foodie, so love trying new restaurants and new stuff around town.
Very nice. What about you, Art?
As Joe mentioned, I'm definitely a foodie. I love trying new restaurants. I also love cooking. That is pretty much my sole kind of artistic ability I have. So I love cooking for friends and family, and I love sharing meals out in the town. And during the summertime, I love to go down to the lake and get out on a boat. And I don't know if I'd exactly call it a hobby, but something I'm really enjoying right now as we're heading into the fall is coaching my son's youth football team. Brings back memories of me not being a very good football player, but at least I can try to coach these kids on how to do it well.
That is funny. I'm going through the same thing with soccer right now. All right. And a final question. What do you think sets apart successful entrepreneurs from those who give up, fail, or never get started?
Well, I think it's the ability and to have the foresight to make changes and pivot. And that's obviously you're going to probably hear that answer from 5 out of 6 people who are starting a business, but never is it a straight line like this. It's going to go like this, and just having the ability to adapt and get the right people in the right seats, I think is the most important thing.
Very, very nice.
I was going to say tenacity, because I do think tenacity is one of those things. I haven't heard of too many just slam dunk easy entrepreneur stories, right? Everybody, gets those speed bumps or roadblocks along the way, and how do they fight through it, right? Whether pivoting your business model or just, pulling up the bootstraps and getting through it. But Joe mentioned something in particular that I think it's industry agnostic. Having good people around you, right, that are willing to be in the trenches. And, at Centered Partners, we have an interesting structure where it's an employee ownership model, right? So it's easy for all of us to be in the trenches. But, in my prior insurance firm that I owned, I was the only owner that worked there. And I will tell you, where we saw the biggest leaps for my business was when I found people that cared almost as much about my business as I did. And you have to cherish those people if you ever find them, and take care of them because they're irreplaceable.
I fully agree with that. 2 outstanding answers. Art, Joe, thank you so much for your time today. And to our listeners, if you got value out of this episode and want to take a closer look at your insurance coverage, get in touch with Art and Joe. I'm going to leave a link to their website, centeredpartners.com, as well as their email addresses in the show notes, and tell them Firing the Man sent you. Thanks, everybody, and we'll see you next week. Before you go, we wanted to share a new service that Ken and I have been using called Getita that has made us over $10,000 in Amazon reimbursements. The service requires no monthly subscription, and Getita collects a small percentage of the money they recover for you. It takes less than 5 minutes to set up and works on all Amazon marketplaces. Go to Getita.com, Getida.com, and enter promo code FTM400. That's FTM for Firing the Man 400 to get your first $400 in reimbursements commission free. How much money does Amazon owe you?